United Kingdom Report by Paula,
Jingyi,
Yin,
Ryan,
Kento.
Major Sources of Influence on Accounting. The United Kingdom consists of 4 different regions: England, Wales, Scotland, and Northern Ireland. Accounting influence goes back to the early 1300s. England had a monetary economy. The merchants used bookkeeping to keep account of their finances and bank loans. Italy had a major influence on developing accounting. The double entry system was devised in 1494 by Luca Pacioli. He was known as the father of accounting. The main purpose of accounting in the early times was pure record keeping, for business owners to oversee that their employees were being honest. Taxes were not levied on profits, so accounting was more focused on internal record keeping, not for public viewing. The Industrial Revolution changed the focus of accounting. Britain led the way for this transformation. From 1760s until about the 1820s, businesses changed from agriculturally based to mercantile and manufacturing based. Growth in businesses' size brought about separation of ownership and management. Record keeping was expanded to other investors. New techniques such as asset evaluation and profit calculations were being developed. Parliament had control over the formation of enterprises, which resulted in costly and lengthy processes. Therefore, it was applied only to very large corporations. In 1844, Parliament created the Joint Stock Companies Act, which allowed incorporation of businesses by registration. However, owners would still be held liable by losses from the company. Complete books and records of accounting had been kept to show to shareholders. Auditors had to give full access to the companies, but there was no specific rules and laws. The government did not want to excessively interfere in private matters. A few years later, Parliament established the 1856 Companies Act, which removed mandated accounting and auditing requirements from the 1844 Act. Until the 1920s, the UK accounting profession did not have a formal accounting theory and principle. Auditing was the primary emphasis. In 1931, Garsney published a book in the UK on consolidated accounts. There was no set standards of how companies could report their financial statements. The process of under-evaluation was very popular. Companies built up secret reserve funds by recording minimum value balance sheets. The Institute of Chartered Accountants supported this method. They stated secret reserves or inner reserves are in certain cases desirable and in many cases essential. The use of secret reserves caused a decline in business standards. This led to the downfall of one of the largest shipping companies, Royal Mail Stream Package Company, in 1926. The profit loss statement said that the company was making a profit, but after the company failed to repay a government loan, it turned out that the company was really operating at a loss. The transfer from the reserve account to show a profit resulted in this discrepancy. The shareholders ended up losing their investment. The president and the internal auditor was charged and went to trial, but both were acquitted of the charges because the transfer to the reserve account were standard practices in the industry. The public was outraged with the accounting profession, resulting in lack of confidence. There was 2 main professional groups. Both groups were at odds of what direction should Parliament take. The Society of Incorporated Accountants and Auditors wanted to have detailed laws and codes of conduct that the auditors must carry out, but the Institute of Chartered Accountants was bigger and had more influence, and thought it was okay to have companies experiment with new methods and procedures, so nothing changed at that time. In 1942, the Taxation and Financial Relation Committee of the ICAEW was established to make a list of recommendations for guidance on accounting principles for their members. It was first published in The Accountant and then later was included in their members' handbook. They were non-mandatory, but they still expressed some kind of authority on reporting methods. A total of 29 recommendations were issued by the committee between 1942 and 1969. In 1968, the ICAEW proposed 2 major changes to the accounting profession. First, the merger of many different accounting organizations throughout the UK into 3 geographical institutes, in England and Wales, Scotland and Ireland. Then they reduced the number of qualifications to 2, the Chartered Accountants and the Licensed Accountants. In 1972, the ICAEW issued the first statements of standard accounting practices. In 2002, the International Accounting Standards was adopted by European Union.
Unique feeders in accounting profession. Professional services contribute 8% of GDP and 11.5% of employment in the UK. Professions are expected to grow rapidly in the foreseeable future as the transition from an industrial to a knowledge-based society continues. Among the most important and powerful professions in modern-day calculative economy and society is accountancy. There are various functions of accounting performing in the society: public accounting, private accounting, governmental accounting, and accounting education. Members of these have formed accounting organizations in attempt to advance, in somehow, the accounting profession. The accounting profession in the United Kingdom is highly organized, with 6 representative bodies whose examinations are the key to a serious accounting career, whether in audit, business, or the public sector. Here is the list of major accounting profession bodies in the UK. A key responsibility of professional bodies is setting and enforcing standards of performance and conduct for members, and the ACCA is the most famous one. Now we are going to talk about some unique features in accounting profession in the United Kingdom. Here is a chart from key facts and trends in the accounting profession, which was reported by Financial Reporting Council in 2017. It shows growth rates and the number of members in the UK and the Association of International Accountants, which is AIA, as at the 31st December for the 5 years to the 31st December 2016. We can see that the total number of members in UK grows steadily. Talk about culture and society. Accountants in UK are professional instead of occupation, and they work for the economic purpose. Here is another chart from Financial Reporting Council's report. The total percentage of female members has increased between 2012 and 2016. ACCA has the largest proportion of female members, which is 46%, and ICAEW has the lowest percentage of female members, which is 28%. From the same report, under the new Audit Regulation Directive, the FRC has ultimate responsibility for statutory audit in the UK. Since its implementation in June 2016, the responsibility for regulation has moved from the RSBs and the FRC oversight to the FRC itself as competent authority. The RSBs now carry out their regulation functions under legally binding delegation agreements with the FRC. About accounting education, to become a chartered certified accountant, a person needs to complete up to 14 professional examinations, 3 years of supervised relevant accountancy experience, and a professional ethics module. And for financial report, the UK accounting emphasizes the truthful and faithful financial statements. The main objective is to protect the interests of corporate shareholders.
Key accounting standards and practice. The beginning of the development of formal accounting standard in the UK was the establishment of the Accounting Standards Steering Committee in 1970 by the ICAEW. At that time, the first statement of standard accounting practice, which is SSAP1, on accounting for the results of associated companies, was issued. Later, the creation of the ASB in August 1990 was the beginning of a new era in accounting standard setting in the UK. From August 1st in 1990, all UK accounting standards were issued by the ASB. In July 2012, the Financial Reporting Council, which is FRC, took ASB's role for setting accounting standards. All accounting standards developed and issued by the ASB are known as Financial Reporting Standard, which is FRS. ASB issues the FRS by publishing a discussion paper, and it later becomes the Financial Reporting Exposition Draft, which is FRED. These are essentially proposed standards which are open to public debate and representation to the ASB. After examining public representation on the FRED, it is often amended by the ASB before being issued as a FRS. SSAPs were the previous generations of accounting standards approved and issued by the ICAEW and other accountancy bodies following a recommendation from the ASC. Each SSAP specifies how a particular item or transaction is to be treated in the final financial statement of company. The ASC developed the first SORPs. These are specialist standards for particular industries or sectors. For example, the Charity Commission issued the Charity SORP. The UITF is a committee of the ASB whose main role is to assist the ASB by investigating areas where conflicts or unsatisfactory interpretation of an accounting standards or Companies Act provision existed or may have developed in the future. In 2015, FRC published the new UK GAAP, which is a regulatory body which established how accounts and financial reports should be prepared in the UK. Compared to the new UK GAAP, all the UK GAAP does not apply to all UK companies. According to EU laws, listed companies must follow the IFRS. Non-listed companies can choose whether to follow the IFRS or the UK GAAP. On the other hand, new UK GAAP applied to all accounting periods starting on or after January 1st in 2016. It aimed to make financial reporting both easier and cheaper, whilst creating a more unified, coherent, and succinct set of standards. New UK GAAP had these 6 main standards. FRS 100 sets out the financial reporting framework. It provides direction as to the relevant standards for an entity. FRS 101 introduced a new reduced disclosure framework enabling most subsidiaries and parents to use the recognition and measurement basis of IFRS in their individual entity financial statement. FRS 102 gives accounting and reporting requirements for unlisted entities. FRS 103 consolidates existing reporting requirements and guidance for insurance contracts. FRS 104 sets out interim reporting requirements. And FRS 105 sets out requirements for micro-entities. It is based on FRS 102 and intended to satisfy legal requirements and to reflect the simpler nature and smaller size of micro-entities.
Degree of acceptance of IFRS. The United Kingdom joined the European Union in 1972. As a member of the EU, the United Kingdom adopted IFRS in 2005. IFRS was implemented by European Union 1606-2002. The Companies Act of 2006 was a way for the UK to simplify corporate law. The Companies Act of 2006 allows all companies besides charities to prepare their individual and consolidated financials using UK GAAP or IFRS. Charities must use UK GAAP. Companies are required to use IFRS when they trade debt or equity in any of the EU stock exchanges. Companies that do not trade on the EU stock exchange have the option to use UK GAAP. Companies that are unlisted companies or do not trade on the EU stock exchange are not required to prepare their financials using IFRS. They are permitted to use either UK GAAP or IFRS. The London Stock Exchange is a major securities market. In 2007, the London Stock Exchange merged with Milan's stock exchange, Borsa Italiana. The London Stock Exchange is the third largest market in the world, behind the New York Stock Exchange and NASDAQ. The market cap is over $6 trillion. Accordingly, the London Stock Exchange is the largest securities market in all of Europe. FRS 102 was the creation of new UK GAAP. The UK created FRS 102 to simplify their reporting standards. New UK GAAP is based off of the framework of IFRS and is much more comparable than old UK GAAP. Accounting for financial instruments, investment properties, deferred taxes, and pension plans now more closely aligns with IFRS in relation to old UK GAAP. It was important and necessary to create a new UK GAAP for several different reasons. Old UK GAAP needed to be simplified and updated. The creation of FRS 102 brought UK reporting standards more in line with IFRS and was a step towards future convergence. Possible future issues. IFRS was adopted by the UK as a member of the EU in 2005. The UK exited the European Union in June 2016 after the citizens of the UK voted on a referendum whether to stay in the EU or not. The referendum passed 51% to 49%. After the referendum, Theresa May took over for David Cameron as Prime Minister of the UK. David Cameron resigned after Brexit as he was a staunch supporter of staying in the EU. Will reporting standards change now that the UK is no longer bound to the rules and laws of the EU? For the time being, the UK has not changed its reporting standards as a result of Brexit. It remains a possibility in the future, albeit unlikely. New UK GAAP is based off of the framework of IFRS. The United Kingdom has been a huge proponent of IFRS and a single reporting standard, and the Brexit referendum is unlikely to change this. In the past, the UK had a very relaxed attitude towards regulation, but that attitude has changed. The Financial Reporting Council was created in 1990. Prior to the FRC, the UK did not have an equivalent to the United States SEC. The FRC is an independent regulator with 6 operating bodies. They include the Accounting Standards Board, Financial Reporting Review Panel, Accountancy and Actuarial Discipline Board, Professional Oversight Board, Auditing Practice Board, and the Board for Actuarial Standards. The FRC develops new accounting standards and ensures that standards are being followed. The FRC took over as the regulatory body to issue accounting standards from the Accounting Standards Board in 2012.
Auditing considerations. Contents are tax structures, accounting measurements, disclosure and presentation, and audit considerations. I want you all to keep in mind that we're auditing the subsidiary of US companies located in the UK, and generally a UK company uses either UK GAAP or IFRS. To focus on the uniqueness of the UK, let's assume subsidiary is using UK GAAP and the US parent company is using US GAAP. Let's take a look at tax structure. These three areas are primal tax obligation for profit organization, and this is a quick comparison to the US. Because the corporate tax rate is lower in the UK, some of the US companies establish their businesses in the UK for the tax saving purpose. That value-added tax for the UK and exercise and sales tax for the US, and also business rate tax for the UK and property tax for the US. These are basically similar in the structure between UK and US, and tax rates are different depending on goods and services and decided by each local government. These are some of the UK unique tax rules. Ring-fence tax is made for the gas and oil industries. Government charges tax on the pure gas and oil revenue and prohibits offsetting with the losses from other activities. Diverted profit tax is basically preventing aggressive tax techniques such as taking advantage of other tax haven jurisdictions. Please read number 3 and number 4 as well for your understanding. Now let's talk about the major GAAP differences between US and the UK. To make this simple, please note UK GAAP is much closer to IFRS, so that this comparison is almost like comparing between US and the IFRS. As indicated at the bottom, if a difference is significant in amount or quality, company has to include adjusted journal entries from UK to US GAAP. I'm not going to explain each of these because I think most of you already know risk classification, and impairment reversal. But other areas such as construction contract, convertible bonds, deferred income tax are also very important to remember. Disclosure and presentation. This required set of financial statements in the UK is similar to those in the US. And the important point here, fundamental concept in the UK accounting is true and fair view. Because it is not defined by the law, auditor must exercise our own professional judgments and professional skepticism when we look at the client's transactions. Also, this quick comparison at the bottom shows the major difference, and segment reporting approach is the big one. We have to be very careful when we test this area, always have to follow up with UK standards. Finally, let's talk about the audit consideration. Remember, there are two purposes for our audit. The first one is for individual financial statement with UK GAAP accordance with UK Company Act. The second one is for consolidated financial statement with US GAAP accordance with PCAOB standards, which means we have to perform integrated audit, and we issue our opinion on fairness of financial statement and effectiveness of internal control. Because of these purposes, number 1, 2, 3, and 4 are especially important to consider. Number 1, we have to test adjusted journal entries. We first evaluate company's policy and measure differences, and then test actual entries by conducting inquiry and vouching. Number 2, this UK company is not only preparing for financial statements, but also reporting other financial information to the headquarters, so that this headquarters can collect all the data from all the subsidiaries to make footnote MD&A disclosures. For this reason, we had to assess all the reporting packages for the accuracy, completeness, and existence. Number 3 is auditing procedures for the individual UK financial statement. We need to conduct audit planning very careful to see whether or not we can perform desirable audit testing, such as confirmation for cash, accounts receivable and payable, and inventory counting as well. Number 4, we have to report any internal control deficiencies found during our audit to the US parent audit team in order for them to evaluate for its materiality and pervasiveness to issue an opinion on internal control. Please check other considerations as well. Thank you very much for listening, and here are our references.